All right, we're gonna bring this Board of Finance meeting to order for April 2nd, 2025. I'm Mike Anderson, the chair. We have Dan Smith, vice chair. Carl Johnston, Gary Nino, Amy Friend is our secretary and alternate. Lou Gingerella, Mino Burdine is another alternate. We have Suzanne Thoreau here for the administration position and running the show on the IT. And I believe Sarah is going to come in when she gets off the train. So right now, I want Winona, why don't you sit in for Sarah? Oh, she is? Hold on. Yeah, I'm gonna seat Winona. She can't really, uh, she's not gonna be in, she's gonna be in and out, so she doesn't want to mess anything up with the vote. Um, any public comment online? Oh, go ahead. First Selectman Carlson in his individual capacity.
Just a question. Did you get my email about possibly adding an appropriation to the, okay, thank you.
Yes. Do we have the auditors queued up? King and King.
Hey, how's everybody doing?
If Sean O'Grady is here for King and Associates, our CPA auditors for the 2024 audit. Take it away, Sean.
Thank you. Is it possible that I could get the screen sharing just so I can kind of scroll through the audit and that way I can jump to the areas that I'm talking about as we go?
Make the host. Make a co-host.
I don't know.
Okay, I think that worked.
Okay.
So does everybody have a copy of the PowerPoint? And then there's 3 audit reports, a thicker one and 2 single audits.
Did I get it?
To Michael.
Okay, Sean, go ahead.
Okay, so there's a PowerPoint. It'll kind of cover the things we're going to go over. And the PowerPoint has page numbers. So if you wanted to refer back to the audit report later with the PowerPoint, you'd be able to. So the audit scope, you have 3 audits. You have the annual financial report, which is the thicker audit report. You have a federal single audit. If you spend over 750,000 of federal funding for your fiscal year 2026, that threshold is going to go up to $1 million. You have a CT single audit. If you spend over 300,000 of state funding for your next fiscal year, that threshold is going to go up to 500,000. And then you also have a Board of Education agreed upon procedure report over their EFS submission. So we'll start on page 13 in the main report. So towards the bottom of the page, you have a general fund, total fund balance at year end of the 5.3 million. We'll see the components later on page 37. GFOA recommends that you keep 2 months of annual revenue and surplus, which is about 16.67%. I know you have a policy to aim between 8.5% and 17% of the general fund expenditures. At year end, your general fund unassigned of 4,875,599 was about 21% of the total 2025 general fund expenditures of 23.2 million. So you're a little bit outside of your target range.
Can I stop you right there, Sean, just for a quick question? Because I know, because on page 13, you also say the Board of Education non-lapsing fund is now included as part of the general fund.
Yep.
So,
Yeah, so that's a part of this committed number right in the middle here.
and is that the 268,090, is that the number that you're using for the undesignated fund for this particular audit?
That was the balance left in it as of the end of the year.
Okay. Thank you.
Yeah, so there's a combining schedule now, towards the back. I'll show you quick. So this will show your general fund and then the BOE's non-lapsing, and then they roll together to become your combined general fund. So this total column will be what you see in the front of the report on that page we were just looking at.
It's page 13 still?
Yep.
All right, go, please continue.
Okay. So yep, next bullet, page 13. The non-lapsing fund is now included as part of the general fund. There's a note 14 on page 49, we'll see later on. Just describes that fund moving from the non-recurring fund into the general fund. Going to page 15. The general fund, so your net increase in fund balance, GAAP basis for your general fund was 336,499. That includes the 200,000 that was spent from non-lapsing, so that decreased your general fund operating surplus that you probably were anticipating. Also on this page, so you can see down at the bottom here, this is new with GASB 100. So they want you to be able to see the fund balances as they were shown in last year's audit. You have this new row, changes to or within the financial reporting entity. So that'll show you funds moving between major and non-major classifications, or in your case, when we moved the education non-lapsing out of CNR into the general fund. So it just kind of shows the movement here and then the adjusted beginning balances. GASB thought it would be easier for people to be able to track it, seeing where it started and then the new starting.
Okay.
Going to page 17. So this is your budgetary basis for the general fund. At year end, you had a net increase in fund balance of 570,998. We'll see the detailed budget pages later on pages 53 to 59. Going page 27. So if you were wondering how you got from page 17 to page 15, this shows you your reconciliation from the budget basis to GAAP basis. So you have your budgetary basis starting numbers, the differences between the two, the on behalf TRB contributions from the state. So those are recognized as revenues and expenditures GAAP basis. You have the non-lapsing fund activity. And then when you have, you had leases this year and Sabitas, which are software leases essentially. So those will get grossed up on GAAP basis, but you don't have those in your budget. and then transfers are shown in your expenditures in your budget, but we reclass them to other financing uses. The next two slides, they're just some charts. Everybody likes to look at a chart. Shows your general fund balance over the last 3 years. It's been relatively consistent, except this year you can see this yellow area that's mostly made up of the non-lapsing fund. And then a comparison of your unassigned fund balance and total general fund balance as a percent of budgeted expenditures. And then some other towns kind of similar to you, what their percentages are.
Sean, just on that slide that we have now, is that the numbers you're showing? Does that include like other people's RISA accounts too, or the Board of Ed undesignated funds? Or is that just their,
Yeah, so if they had some places don't have the non-lapsing fund, but if they did, it would be a part of this total fund balance. Because it's not in your unassigned, so it's committed.
okay. So that 22.8% for us, that's with both. And the 21% is just us, the
Yeah.
regular undesignated?
Yeah, the 21 is just the unassigned, and then the 22 is everything together.
Would I be correct in saying that, like, it's like, say Salem, they just had a huge amount in some other committed fund?
Yeah, Chris does that audit, so I'm not sure what the reason is why that one is so huge.
Okay, thank you.
Yeah, that one seems high.
All right.
To the next slide. Pages 28 and 29. So at year end, you had cash and cash equivalents of about 6.2 million on hand. And then you had investments made up of CDs, mutual funds of about 5.5 million. Going to pages 34, 36. So this is your long-term liability section. During the year, you paid down your GO bonds, 737,000. So you're left with a remaining balance of 23.5 million. You have upcoming annual debt maturity payments for the next 5 years of about 1.4 million. And that includes principal and interest. Page 36. So you have a new lease liability and subscription-based IT arrangement liability. So this is from like copiers, or if you have multi-year software agreements, these will show up here now. Page 37. This is your fund balance components. So you can see that back on page 13, that 291,000 that was committed, you can see that the makeup of it is the 268,000 for the Board of Ed non-lapsing. And then there's another 23,000 in there from general government. Part of the assigned fund balance, there was about 96,000 to balance out next year's budget, and then 39,000 in Board of Ed encumbrances.
Sean, just so it's clear, we're clear, that 96,668, that's for this year's budget.
Yeah, so your 2025 budget.
Yeah, okay, thank you.
So this balance includes the school's non-lapsing.
Yeah, so this 291 includes the non-lapsing.
Right. So the school's non-lapsing is 268 embedded in. Yep,
Yes,
At that time.
yeah,
Yeah.
at the end of June.
got it. Thanks.
The
Okay.
next page, few pages are related to pensions and OPEB. Nothing exciting. Page 48, so you have upcoming pronouncements. There's 4 new ones coming up. GASB's 101, 102, 103, and 104. GASB 101 will likely impact you, and that'll be effective for your next fiscal year. And that's related to compensated absence measurements. And then GASB 103 will impact the financial reporting a little bit, but that won't be effective until fiscal year 2026. Going to page 49. So here's the note I mentioned before with the new GASB 100. So when you have funds moving between major and non-major, you end up with this note now, and it just shows you where fund balances started, the effect of the changes, and then new beginning fund balances with a little narrative of what happened. All right, going to pages 53 to 59. So this is your detailed budgetary schedule. Some of the big items in here, the municipal revenue sharing grant, you received 130,000 roughly that you hadn't anticipated in your budget. The investment income, 130,000 higher than you had anticipated. Public safety in total, so about 110,000 under budget. Looks like 94,000 of that was related to the state troopers. And then public works was about in total 91,000 under budget. You had also done the additional appropriation for the steep building and fields of the 426,000, but no money was actually moved. So the appropriation is showing up here, but there was no actual transfer before year end. Okay, page 60, 61. I mentioned that before. Combining schedule for your general fund now shows your general fund that you're used to, Board of Ed non-lapsing, and then it rolled together.
What page was that, Sean?
60 and 61. And then on page 70, so we usually look at this as a metric in the tax collector's report. So at year end, you had about 796,000 outstanding taxes. As a percentage of your current levy, it works out to about 4.5%. We usually see it between 2 and 6%. So you're in the range that we normally see.
So that was on page 70?
Yep.
Where's that percentage?
The percentage doesn't show up in the report, but it's this 796 divided by the current levy, 17. And then that would take us through the main report. I don't know if we want to do questions on them as we go, or if you want to do questions at the end.
I think we should pause for any questions on this particular report. Mike, I just want to make sure that my terminologies um, when you're referring to like the general fund, that now includes, the non-lapsing fund. You're referring to the general fund, is that it's not our undesignated account, is it? Or is it
No,
all, all of the revenue?
your entire, like your general fund in entirety.
Right.
So like, as opposed to like your capital fund or small cities, like your general operating fund.
I understand.
I just had a couple of questions.
Go ahead.
Um, About the undesignated fund. You had mentioned that for the town of North Stonington, I think you said, given our numbers, we should be at 16% would be the number that we should be at for our undesignated fund.
Yeah, so that's what GFOA recommends, and then your target policy is to get between 8.5 and 17.
Right. So with that, if 16% is the sweet spot as far as where we should we be reviewing and seeing if we should rethink our 8.5% being much lower than what would be considered reasonable?
Yeah, you might want to revise your policy to raise the 8.5% up a little bit.
16 is the middle spot, then we should probably, I'm guessing, look at 10 to 20% in that range, something like that.
Yeah, it's really up to you guys where you feel comfortable having your reserve balance at. It's just GFOA's benchmark is that roughly 16%.
Is that something that the bond holders would keep an eye on? That 16% number?
Yeah, I don't want to speak for the bond council, but I think they do look at the unassigned fund balance when they're considering ratings. So a higher percentage would be, better for paying back debt.
Is it 16% or is it the 2 months of annual revenues?
So the 2 months works out to about 16 point.
But that changes over time, right? It's always a moving target.
Yeah, if you just think about it as like a year and you divide it by 12 and then times 2, it's like 1/6.
I had one other question, just something you mentioned. Maybe I didn't hear it correctly. You said some towns do not have a non-lapsing account for their school department.
Yeah, so now the Board of Ed can set it up on their own with the new state law. But some have just, chosen not to do it as part of, they know the upcoming negotiation with the budget is they're going to have a reserve fund that's going to become a part of that.
Right. Okay, thank you.
Any other questions? Okay, let's continue.
So next we'll go to the federal single audit.
Okay,
So on pages 6 and 7. So this is your schedule of expenditures of federal awards. Your total expenditure for the year was 958,000. So if it was at the upcoming threshold in 2 years, you would have been below the threshold. You had 143,000 related to the school nutrition program, another 450,000 in various education-related grants, and then 360,000 in ARPA funding. The major program that was selected for testing in 2024 was the ARPA grants. That's on page 9. Page 9. The summary of auditors results. So in internal control over financial reporting, which is your main package, no material weaknesses identified and no significant deficiencies identified. No non-compliance material to the financial statements noted. And then in internal control over the major programs, which was that ARPA program, no material weaknesses identified. There's one significant deficiency. It's been pretty common. I think most of the towns have had it. It's related to procurement, the suspension and debarment. And so we could look at it. It's kind of small. In summary, when the federal government wants you, when you're entering into a covered transaction with a vendor and you're going to use federal funds, they want you to make sure that that vendor isn't suspended or debarred from receiving federal funds. And a way you can do that is by checking the System for Award Management, which is sam.gov. So if a vendor is suspended or debarred, when you look them up on there, it'll tell you. And then you're not supposed to enter into a contract with them if you're going to be using federal funding. So the recommendation is to establish a policy to, when you're using federal funding, to go check and document that you checked to make sure that they weren't excluded.
So this was just a bookkeeping. You didn't identify any
No.
of,
Yeah, it's really just a process thing. So here in context, so there was no process in place to verify that they were not suspended or debarred. However, none of the vendors that we had selected were suspended or debarred.
Okay,
So it's not like there was no vendor that you had entered into. It's just that you wouldn't have known if you did.
got it.
Going to, okay, so then the next would be the state single audit if there was no other questions on the federal.
Now we're good.
Okay, page 6 in the state single audit. Schedule expenditures, state financial assistance. About 4.6 million in total assistance. Of that amount, 2.7 million was ECS and excess cost. 396,000 was the STEEP grant, 239,000 for Town Aid Road, 120,000 in LoSiP, and then you had 881,000 in the PQAT funding and 130,000 from that municipal revenue sharing grant. Pages 8 and 9, summary of audit results. The major programs selected for testing was the STEEP grant and then Town Aid Road. Same as the Fed with this section, internal control over financial reporting. So that's referring back to your main report. No material weaknesses identified, no significant deficiencies identified, no non-compliance material to financial statements noted. And then over the state financial assistance, major programs, no material weaknesses. There was one significant deficiency. It's related to the Town Aid Road grant. So for this year, they added in a new requirement that you have to do reporting related to your Town Aid Road grant. And so that reporting was just missed during your staff turnover. If there's no questions on the state single audit, we can go to, so we have a management letter as well.
Go ahead.
So management letter, so these recommendations, they don't rise to the level of material weaknesses or significant deficiencies, but they're good practices and they'll help you from falling into having material weaknesses and significant deficiencies. So the first one, reconciliation between the town and the Board of Ed. I don't know if you want me to read these pages to you or if you have this and we could just do them in summary, but
Summarize. I think we received these prior to the presentation, so I think you can summarize.
okay. So reconciliation town and board of ed. So best practice would be to town and board of ed should get together monthly and make sure what the board of ed is showing as expended from their iVision program is matching up with what the town has in QuickBooks as expended for the Board of Education. If you let it go for too long and you're not reconciled, when you get to year end, it's very difficult to reconcile $16 million.
Yeah.
Next one, bank reconciliations. So bank reconciliations everywhere should be prepared monthly and reviewed by another individual, and that reviewing individual should sign off on it. So there's evidence that I was reviewed. So just a best practice to catch any irregularities and to make sure that they're being done and they agree to the trial balances.
Those are all good recommendations.
CAF fund invoice approval. So a sample of the disbursements from the cafeteria fund just didn't have like formal approval on the invoices. I know the invoices are related to a contract. It'd be best to just have somebody review the invoice and sign it before it gets paid, even though it's related to a signed contract. And then reconciliation between EGMS. So that's the Board of Ed's grant reporting portal. And then reconciliation between that and their general ledger. Some of the expenditures in the EGMS didn't reconcile back to what was in the final general ledger. So it would be good just before the audit starts to reconcile the ED 141 summary from EGMS back to the amounts reported in the Board of Ed general ledger. That takes us through that one if anyone has any questions.
Mike, which entity does it fall upon to make sure that process, procedures, and controls around these recommendations are actually put in place and managed for the Board of Ed?
Well, each year we have the audit, we have the discussion with the auditors. There's no necessary follow-up procedure with regard to the Board of Finance to ensure it's really up to the Board of Selectmen and the Board of Education to monitor their own people to make sure that these recommendations are followed up with and procedures are changed. I would some of these are newer recommendations. I know that we've had for years a discussion about whether or not the Board of Ed is going to reconcile with the town books, and because they use different systems, and it's always been a challenge. Last year with a change in staffing, obviously probably exacerbated that challenge. But ultimately, to answer your question, it's the Board of Selectmen that have to monitor the central their office, and Board of Education has to monitor their bookkeeping.
Can we make a motion that the Board of Selectmen and the Board of Education review the corrective actions or the findings and come to us with the corrective action, so at least we can monitor that it's being done? I just want to make sure that we act upon the recommendations.
Well, let's finish with Sean, and then we can
Okay.
certainly entertain a motion on that and have a discussion. Yeah. Okay. So, all in all, Sean, we have a fairly solid audit with no material weaknesses or deficiencies. Is that correct?
Yep.
And can you confirm one more time year-end give back, audited give back by the general government, as I understand, was that 579.98?
Yeah, so your operating budget, the surplus was 579.98.
And does that include Board of Education?
Yeah, that includes the Board of Education. So education was 14,000 under budget.
Okay. But that's including the 579.98.
Yeah, that's a part of it.
Okay.
So I'm hung up on slide 2, bullet 2, page 13, Board of Ed non-lapsing fund is now included as part of the general fund. Like the word now has me thrown that it didn't used to be. So I'm confused of, is now it was always, or is now it never was? And if it now never was, what changed?
No, so it used to be a part of your capital or non-recurring fund. So if we zoom out here.
Okay, so what changed? It used to be part of the capital non-recurring fund and it's moved buckets then.
Yeah, so now it's part of the general fund. The new state statute that came out, so they can spend their non-lapsing on anything education related. So that doesn't, like, if you could spend it on anything, it doesn't qualify as another fund anymore, really. It really only qualifies to be in a general fund. Because it can't be a special revenue fund because it doesn't have a dedicated funding stream other than general fund transfers. And the capital project fund would be if it was just specifically for capital projects. So
So
it just
does it-
technically doesn't qualify for any other funds anymore.
Does that have any other impact to us?
No, it just shows up in your committed fund balance now. So instead of being in the committed fund balance and capital non-recurring, it's in the committed fund balance in the general fund. And you can see the pieces of it on 60 and 61. So you could see your general fund and then the non-lapsing, and then it rolled together.
So is it less restrictive now on what it can be spent on or more restrictive now?
It's less now. It just has to be spent on education.
Right, so so Dan, you're hanging with me. Like something has changed, but I'm not.
I can tell you that the risk account before, you couldn't use it for salaries. You couldn't use it for certain, I'm just asking, that's what.
Right, so this is what I'm trying to understand. Something has changed, but I've yet to figure out what has changed because we're now saying education only, but it's less restrictive. So what have we gained?
It was the new state statute that was passed.
And that has to do with them being independent of having to deal with the finance board. No, I'm asking a question, because that's why they sent us that letter saying we're not going to be relying on your input on that.
Sean, I think the question is that the state statute just said that they don't have to get our approval to establish this non-lapsing account.
Yeah.
And
And the
how does that statute change what they can spend the money on?
so it just says they could spend it on education. It's not like restricted to just capital. So That's why it's not in the capital fund.
No,
No,
no. We were on a clear direction that they couldn't spend it on salaries. They had to spend it for education purposes only.
but then before it was more, it was, they never did it for salaries and those types of things that are supposed to be budgeted
Budgeted items.
expenses. It was more capital items.
So they could use this money then now for anything, any line item within. the
I think
budget.
we need to get clarification from the Board of Education on that. Or maybe council.
Yeah, I would
I
let,
don't-
let
I
the
don't
committee-
know if Sean's necessarily the one that's going to answer that question. Correct?
the statute is pretty big. I would defer interpretation to an attorney.
Not this one.
I think it's fair to say that both policies should be reviewed this year.
Does anyone have any questions regarding the audit? So let's just finalize with it's, we call that a clean audit, Sean.
Hmm. Yeah, so
I like the, way yes, in depositions, you don't say, uh-huh. Or-
yeah, it was. And you had just the two findings related to the grants and then the management letter.
Understood. We will keep an eye on that.
So that means it's an unmodified opinion.
Yeah, clean opinion.
Okay. Motion to accept. Yeah, we'll move to accept the audit as presented.
Second.
Any further discussion? We're gonna seat Sarah now that she's here from Winona. So any discussion? All those in favor say aye. Aye. Any opposed? Any abstentions? And motion carries 6-0. Sean, thank you very much. We appreciate you guys' hard work in that limited end of time period.
Thank you guys for having me.
Okay. Yes. Yep. Do you need Sean's?
No, I'm sorry. You cut him off, right?
Yeah.
Yeah. No, I just want to let you, know, I think, is Melissa online? All right, so a couple of things. This order ended June of 2024. Our finance department came into play in September 2024. Remarkable job by Melissa and Sue to get this to where it is now to have. a clean order.
Agreed.
But since Melissa's online and some of the management stuff we talked about in the reconciliation, she can talk a little bit about that if you have questions. And the second thing is, she can explain to you why our undesignated fund, which does not include the non-lapsing, when we give you the undesignated fund number, I'm not including the number. That's in the order, but not with us.
Correct.
And secondly, why the number he said was 579 and then minus 14,009 for the Board of Ed, but there's more deductions from that, which is when you look at your undesignated fund tonight, there's other things that had to come out of that, which since 2024. Just want to let you know that the numbers won't agree tonight.
Right.
But if you need Melissa at all, she is online.
Okay.
I think we get that, yeah.
Well, I'll just. Does someone want to make a motion regarding the auditor's recommendations?
I make a motion that the Board of Selectmen and the Board of Education review the recommendations and report back to the Board of Finance with the planned, I don't want to even call them corrective actions, but how we're going to address the recommendations from the audit. Just leading the witness a little bit. Monthly meetings between the finance people, absolutely. Reconciliation before the audit, absolutely. Oh, go ahead. Winona.
So I'm not seated, but I mean, the words that we would normally use are process, procedures, and controls around those recommendations. So what's been put in place since those recommendations were were put out there. That's really what all we're looking for.
So Melissa and I are currently working on the financial policies and procedures.
Yeah, so I kind of meandered. I got to go back to my motion. Mike's giving me the eye. I make a motion that the Board of Selectmen and Board of Education meet to review the audit findings and come back to the Board of Finance with the recommended path forward.
And what time period were you looking at for that motion?
60 days.
Second,
I would, okay. Any discussion?
because if you don't put a timetable on it,
I understand, but we're in the middle of budget season and
well, have more meetings. For them. I'm dead serious. We have meetings
I would
Mondays and
like a
Wednesdays.
motion that's going to allow a process to happen and come back to us in a time that we all are focused and ready to hear it.
And we're going to be going into the next fiscal year, June 30th, July 1st. So they should have it in place prior to the next fiscal year.
Okay, so in June, come back in
Which-
June,
June 30th, yeah.
And by June 30th.
by June 30th. Is that good? Will you modify your motion just by June 30th?
By June 30th.
Second.
Second by Dan. Any further discussion? All those in favor say aye. Aye. Any opposed? Any abstentions? All
Yeah.
right, 6-0.
Now, the only question I have is if a board doesn't want to do it, and like, well, we don't have to do it. It's a recommendation. There's no teeth to this tiger.
No, it is, they're coming back to us.
Okay.
That would mean that they'd be in, not in step with federal and state regulation. You have to see whatever teeth happen there.
Do you have the motion? Can you read the motion back, please?
I have notes on the motion. So
Okay.
Gary motions that the Board of Education and Board of Selectmen review the audit findings. In parentheses, I have processes, procedures, and controls of the recommendations provided by King and Associates and return with a plan to address the recommendations by June 30th.
Motion's perfectly written.
Dan seconds.
Okay. Just saying.
They're just reviewing recommendations. It's not a recommendation for us to come back. They're coming back by June 30th, how they've reviewed the recommendations. Good point. I think it's good clarification.
I'm just wondering.
Before we move on, Bob, as far as the 579.98, when was the last undesignated fund balance with all the breakdown? When's the last dated one that? Yesterday and today? Okay. All right, we're gonna move on to agenda item number 4. Look at the Board of Selectmen draft budget revisions.
Can we jump the agenda so we can cut this poor guy loose?
Oh, yeah.
I'll make the motion.
I
Okay.
know, he's like a coiled spring.
I'll do this. I'd like to make a motion to add appropriation for ambulance association between agenda item 3 and 4.
Second. Any further discussion? All those in favor say aye. Aye. Opposed? Okay.
I'll just give the backstory that he can ask for the money. So he came to see me and I couldn't remember this was coming. That's why his budget asked this year. This year's budget is so much bigger than last year. And he's been in front of you before to tell you the tales of war when it comes to the payroll. But I said, come to the Board of Selectmen meeting last night, we'll discuss it. I'll give my people 2 weeks before we vote on it, rather than hear it for the first time and vote last evening. He did such a good job that the Board of Selectmen voted to vote on this last evening. I expected to come to you on April 16th, not April 2nd. So I scurried today, did the appropriation, got a hold of you guys and said, hey, Logan, can you come back tomorrow night? Because we're going to do this sooner instead of later. There's a bit of a deadline, only because he has 3 weeks of 3 pay periods, which is 6 weeks of pay before it runs out. The good news is we have a town meeting on May 5th, and this would have to go to town meeting since it exceeds $20,000. So I'll let Logan talk about the appropriation, if you approve it, that is.
Good evening, everybody. I'm Logan Jill. I'm the chief of the ambulance. Most of you, or all of you, already know that. So in December, I went down and talked to Bob about our pay rate and where we were at with our pay for our EMTs in the surrounding areas. At that point, none of my EMTs and myself had received a raise in over 18 months. So I went down to Bob, had a conversation with him regarding raises. And then 2 of my full-time employees gave their 2-week notice to seek employment elsewhere for higher wages. So at that point, I went down and talked to Bob and told him that I needed to give a raise to our employees so that they would stay here in North Stonington and serve our community. So at that point, a decision was made to give them a $1 raise an hour across the board, which was technically still under the percentage that we should have given them, but it was enough to stabilize the rest of the staffing issue. So I'm coming in tonight to request an additional $76,000 to supplement our payroll for the last 3 to 4 pay periods before the next fiscal year. With that being said, in the email I sent this morning, these funds will only be used for payroll and they will only be used to supplement payroll. So billing is still going to come in. Unfortunately, billing is unpredictable. And unfortunately, May and June seem to be the worst part of our billing income because of people have just started the new year. They haven't met their deductibles yet. So some of the insurance companies aren't paying out and it relies on the patient to pay their portion of the bill in order for us to get income from them. So May and June usually drop under $8,000 for billing. With that saying, June, July, and then towards the end of the year is when billing picks back up. Our highest billing payout month is February and March. So I was able to hold us over this long. My plan is to use, if granted, to use that money to supplement just our payroll, and whatever is left, we will give back to the town. But I didn't want to request too less and then be short a week, because the moment I'm not able to pay my professionals, they're going to seek elsewhere. So that's the request, is 76,000.
So if you're billing for services rendered in this, I mean, from now to the end of June, are we going to be reimbursed for that, or is this for, I'm just trying to, which fiscal year are we talking about right now? We're talking about
this current fiscal year until July.
Okay. And the budget that we passed last year, we just don't have enough money to cover it cash flow wise, partly because of billing and partly because it's just more expensive.
Yes, sir. As of today, I did officially write off the $98,000 for the town residents.
What is that?
So when I did my budget presentation.
Take that.
There was like $200,000 that was outstanding for non-town residents
Right.
and $98,000 for town residents. When I did my budget proposal, I said that I was going to write those off, and they were officially written off today.
Okay, great.
I make a motion, we approve the appropriation to the Ambulance Association as requested.
Second that.
I just have a question. I apologize. It's probably because I was not here when you did your presentation. How do you know that's enough? So what I'm hearing is, I guess my question is it a gap between your billable rate and what the town supplies for funding? Or is it just really I'm having a hard time tracing how you got to 76 and how do you know that's enough?
So what I did is I took the average payroll of a 2-week period. An average pay period is anywhere between $17,000 and $19,000. And with that being said, that all accounts for if there's an overtime shift. If there's an order in, we pay double time because we're ordering them in away from their families or whatever they already had planned. So the average pay week is from 17 to 19. Pay period is from 17 to 19,000. I times that by 4 pay periods to be in the safe zone to hold us over until the next fiscal year comes in. And that's why this money is only going to be used, if allocated, will only be used for payroll, no other bills or outstanding balances.
What magical thing happens at the next fiscal period?
We get our next sum of town funding.
Okay, so the funding you got last year basically brought you to April.
Now, yep,
Yep, and so we're just bridging the gap between now and April.
yes, ma'am.
Okay, thank you.
I have one question. So going into this next fiscal year, are you guys giving yourselves raises and so we don't have this same issue next year?
So I accounted for a 2.5% rate increase for my employees.
Okay, how's that matched to the other towns around here so we don't have people jumping?
So excuse me, Stonington Ambulance is all volunteer.
Okay.
They're based off of a point system, so they get a certain amount of points per hour that's paid out quarterly to their employees. Mystic River just went from $21 to $23 an hour. Moosa Plainfield Ambulance, which also serves Sterling and Oneiko, they just went up to $22 an hour for their full-time staffing, like their full-time EMTs. American Ambulance is paying almost $25 an hour.
Where are we?
So our base rate, full-time EMT with medical benefits makes $20 an hour.
Okay.
If they're not receiving medical benefits, then they receive $22 an hour.
We're in the lower end of ballpark. Is that what the new copy? There you go.
Is that what the,
That's where they're currently at
They're
right
currently
now.
at, okay.
Yes.
Yeah.
all right. And if they get, if you had this money here today, what would that amount be?
As in,
Or is that calculated in the, you just said this is calculated in raises to keep,
no. So the raise was already given in December.
Yeah.
okay.
To try to prolong our, like, to keep our
Okay,
EMTs here.
okay, I
in
missed that
Stonington.
part, sorry.
So what will their hourly rate be come July?
So their increase will be about, it will be 3%, or 2.5%. So they'll most likely get anywhere between a 50-cent to a 64-cent raise, depending on how long they've been there.
Any further questions? All those in favor say aye. Aye. Any opposed? Any abstentions? Motion carries.
Thank you very much.
Thank you.
Thank you so much.
Is that on there? Okay, thank you, Gary, for the reminder for the additional agenda item. Now we're definitely on to number 4. Board of Selectmen draft budget revisions.
So I gave you the newest version of the budget, which is draft 5. Has nothing through on the Board of Ed on it. This is strictly just town. And also I gave you a kind of a cheat sheet list of what we actually did last night. I'll go through the additions and the subtractions. So on the additions, one of the selectmen was approached by one of the people that put on was with the Rec Commission, drama program to be specific, and said she felt it was under budgeted because she plans on X number of plays this year. The thing with that, it's we put the $4,000 into the expenditures for the rec, but we also, and that's on B 16.01, but we offset that with $4,000 in the revenue, which is on A 4.01. The second thing we did was, the other addition was the per diem for the firefighters. So we know that they came to us, came to you actually, and wanted to know why the Board of Selectmen cut $23,000 out of their budget. Obviously, they weren't very happy. And they appealed to the Board of Finance, who said, this is a Board of Selectmen problem, so Bob deal with it. So Bob dealt with it. So I got a hold of the chief. We sat down the next day and I had a really good conversation with the chief and said, basically, I'm not putting $23,000 back in the budget. So you have to come up with something else. And I had mentioned to him, and he was very appreciative of the meeting. It wasn't a meeting with any, yelling, raised voices. It was just a general meeting about what the town needs and what the fire company needs to do for the town. And it's a two-way street. And I explained to him that the fire company in this particular budget did very well on capital and in the general budget. And it was their time to come back with something that shows that they are working with the town. I really expected him to go back. And I know he's going to catch some flack on his side too, because his people want to actually maximize what they can do. I thought he was going to come back and say, let's split the difference, 11,500 each. And he came back with the number of 7,898.00, which I thought showed me that there's movement from the board, from the fire company. They're willing to work with the town. And I think we're building a better relationship than maybe we've had in the past. So all three selectmen felt that there was no need not to put that 7,898 back into the budget. So we did that. So the total money is going back into the budget. We're not counting the 4,000 in revenue. We're 11,898. So that went back in, which raised the percentage before we started looking on how we're going to get it back down again, back to 4%. So then we went through the reductions. The first one with economic development, they had money in there for two chambers, two chamber of commerces. We said you can have money for one. So we took one of the chambers out, which was $600. I'm going to skip the second one because I want to get to that last. Third one, flock cameras. We had pushback from some residents about the flock cameras and AI and privacy issues and so on. And we felt maybe it's a good thing to have for the town, but maybe not this budget. If we get more information on it, maybe we can address it next year. And we'll see what the other towns around us are doing too. Maybe if everybody has cameras around us, we don't need them. Land Hill Association and the Connecticut Conservation District, they were first time people on the budget. They had sent a request. We put it on there, which anybody can request, we'll put it on, but then it can come off. And we felt, since we're trying to get this thing down to 4% or lower, it wasn't a big number, but we voted to take both of those off. B30.12, Three Wise Women. That's what I referred to originally on this budget as Frights and Lights. It's Jen Strunk and her group. They've now have a 501c3, I believe, and I think it's Jen, Sarah, and Tula are on it. And they had $1,500 on here, but we felt that, and I know she wanted to do something with Bistro Lights and some of the things they do for town with the parade and the Frights and Lights are wonderful things that brings the town together. But again, it was a first time ask, and we dropped that down to $500 from $1,500. Next, Conservation Commission. They put out the calendars they've been doing for years. I think for 10 years, that has the different pictures from town. What the Conservation Commission was willing to do was lower their budget because they're not going to do the calendars anymore. They used to be able to put calendars on the counter at the town clerk's office and in my office, sell them for, I think it was $20 a piece and make all the money back. This year, they sold only a few. We dropped it to $5 and they're still sitting in town hall. And obviously, when we get farther in the year, who wants a calendar from as the year's half over? There's nice pictures in it, but that's about it. So we dropped that $1,200, which is what the printing cost for the calendars. Affordable housing, we had the chairman of affordable housing here last evening. We are doing some perk testing on a piece of property near the buses across the street near Truckies. He put that in as to help defray costs if they were able to, if the perk test passed and they could start looking at possibly doing a project, he thought he could do some drawings and so on, but maybe we're putting the cart ahead of the horse a little bit. So now we're saying, let's get the perk test done. Let's have legislate look at it to see if this is even a viable project. And then if it is, we can talk about how we're going to fund some of the drawings and so on, because it's got to go through a process at that point. So he was willing to drop back down to $1 as a placeholder, since it was just, there's still a lot of questions to be answered. The last one, which was B2321, the giving closet. So this is something that we as a board struggled with. We've had a lot of feedback from townspeople. It came back in at a very high, first it came in as a very high ask of 35,000. We dropped it to 20. And then we had some letters that we received. People came by town hall, phone calls, and they thought that for whatever reason, and most reason was lack of organization, a new ask, a big number, maybe we should find out more about what was going on before we put that money forth. Last night, one of the selectmen asked to do it at maybe 5,000. I had preferred 10. One of the selectmen said, no, let's go to 0. And then if once we get more news about the organization, they can come to the Board of Finance and the Board of Selectmen and ask for funds that way. Sarah Valancourt is the unofficial director. I mean, she's the one that runs it. She was in my office from 4:05 until about 5:05 today. Probably one of the toughest meetings I've had to have. It might make me rethink my raise. But it's just because she's so passionate and she does so much. And I think she just wants to keep doing more and more. She's done things for families in town. And she wanted to know if there's any alternative way of funding. And we talked about some of the options she may have. But I think she was distraught, as you can imagine. Something she puts her heart and soul into. And then it went from 20 to 0. Just talked about it, let her vent for a while, and then try to get constructive in our discussion to see what the best way to move forward is. And that's the way we left it. So again, it was a tough decision. There's a lot of things that she does for town, and ironic as it is, on the cover of the Quarterly today is Sarah and Jen Strunk, 2 people we caught last night. So anyway, 2 wonderful women who do a lot for town. So that's where we are. If you take so we took 32,599 out of the budget. And then when you add the 11,898 back in, we end up with a net 20,701 reduction. And if you look at the budget itself on the first page, it goes down to a 3.77 budget, which is lower than the 4% you asked for. And and I'd like to do this year only, if I won't do this again next year. If you take the 100,000 for the maintenance out of there, we would have 2.04 budget. That's where we are. Any questions?
So you didn't touch the maintenance budget for the schools. You left that as you originally budgeted that.
I did not. I'll tell you why, Lou, is because it's the first year we did, we were on the capital committee and we looked at about $200,000 worth of maintenance that the town did. And I sat down with Alan and we came up with about 103,000 that we thought was legitimate the town could pay. It's going to be a moving target for 2 or 3 years, I think. I think that the town is making a good move to admit that these are our bills that we should help with. We're going to scrutinize when there's things that have to be done and who actually should pay for them. And maybe I'm wrong, maybe it's 75, maybe it's a 125, but we'll know better as we go through the process. But I don't want to change it now. I just wanted to leave it the way it was. And then at the next year, when we're having these discussions, we can talk about where we were. You know, hopefully that we can be somewhere close to that number. Any other questions?
I listened to the meeting. Thanks for the long evening. You guys did a nice job.
Oh, last night? That wasn't too bad.
I listened to it today. I was live.
Yeah. So you have to do what I do with the Board of Finance meetings. I treat them as 3-part miniseries. Do 45 minutes at a time, take a break, 45 minutes, take a break. Yeah. Unless I'm at it, then I have to watch it. Anything else?
Yeah, give me a second. I'm doing some math.
Bob, can you just explain again the Lake Association weed control?
So the three main lakes in town, which is Wyosset, Billings, and Anderson Pond, aka Blue Lake, they get $5,000 a year, and they use it to mitigate milfoil and other things that grow in the lake. Two of the lakes, I think, have their own. I know Billings, is it Billings that has their own tax district? No, it's Blue. It has that. They have the homeowners pay fees to it. But that's something we've been doing for a while. It seems like if they miss a year, it's twice as tough the next year to do it. So I think it's probably about 4 or 5 years in a row now. We've been donating putting in the budget $5,000 for each of the 3 lakes. They send us bills. We don't just give them the money. They send us bills, and then their $5,000 gets taken down as we pay the bills. There's 2 other lakes in town that we don't do is Lake of Isles, which is a portion of that to North Stonington, and part of the one on Land Hill Road.
So the weeds start to, will grow up from the bottom and they'll start, yeah.
I was just wondering, I'm happy that you said that you do get the receipts,
The what?
that you do receive receipts.
Yes. Yep.
So their association dues, basically.
Not all the lakes have that, but some do.
Actually optional. It's not just used.
I was just wondering, it's a big number and it's a question that's come up.
Mhm.
So
No. So as presented, you have 3.77% for the government operating. If you added $13,000 back to giving closet, you'd still be under 4.
Okay. You're doing the math, so I guess I'd agree with you.
It's 3.99%. I'm just throwing this out
Okay.
there for a matter of
I'd like to
discussion.
make a motion. We accept the Board of Selectmen's proposed budget as submitted. Sorry, Mike.
Second.
All right, we have a motion and a second. We have any further discussion?
So I would recommend everybody listen in or look in. It's about I think it's about an hour into last night's meeting, but they have a long discussion about this and how they ended up at taking it to the number and their course of action should, I think, structure and sustainability be demonstrated for the Giving Closet to let it progress. But they didn't see, I'm going from memory. The selectmen collectively didn't see a reason to tie up taxpayer money on what may or may not happen. If they come forward with 501c3 structure showing that they're a sustainable organization, they'll find a way to get funding for the year. Is that fair, Bob?
Yes.
Thanks.
And also currently in their account through whatever the school's got, the activity fund or whatever, they got close to, I think, $2,200 in that account.
Okay.
So they're not on empty. They have some funds. It's still being run by the school. I totally agree with the Board of Selectmen's logic of until they show sustainability, structure, and getting everything all organized, then we can fund it correctly.
Anybody else have a comment or discussion? Okay. All those in favor of accepting the Board of Selectmen's revised budget as presented, say aye. Aye. Any opposed? Any abstentions?
And one of the note, we did pass the automobile option last night, which will put money into the revenue. I didn't want to really talk about that until you did what you want to do with the budget. Because I don't think personally that should impact the budget. It should impact maybe the mill rate, but not the budget. So the last meeting, one of the residents came in and said, wouldn't it be nice if we just take the money that Daryl says we have in revenue and spend that money? And when she made the statement, the revenue at the time was around 748,000 and the ask was 1.3 million. If both boards get down to 4% or close to it, if I say that 377 and the Board of Ed gets down to 4, with this new additional revenue, which goes up to I think it's 911,000 it's in here in your new draft 5. If we both get down to where we need to be, there's only about a $40,000 difference between the 911 and it's like 963. So we're really close to the revenue, which is to me a fiscally responsible way the town does business. So just want to mention that. Thank you.
That's a lot of good work there. All right, moving on to agenda item number 5. We're going to review the undesignated funds. I put this on here because I anticipated we were going to get the final audited number for what was going to return to the undesignated fund. End of fiscal year 23-24. And that's Bob, the document that you gave? All right, so that's the audited number that's from July 2023.
So I wanted to talk to you about the give back of what we said. We thought it was around 517. They said it was 579. Melissa had some things that had to come out of it. Like they had the steep grant in it. We take it out of the, so like we've taken the 426, 153 out of our undesignated fund, which they don't do that. That's still in there because it's not spent money. And that's why I wanted, I don't know if Melissa's still on it. She's on it, sure. So she could explain to you my number, the actual number that we're putting in as a give back is 423,613, which brings us up to a 18.81% undesignated fund. Once the steep grant money is spent, 80% of it will go back in, but that's not included. And the 58,000 from the handicap trail, the AA trail goes in, that 58,000 goes back in. We have some other things coming up, which some the obligation of funds, and we have an auction going on right now, which will increase the undesignated fund if all goes well, which it should, about another $165,000. But the obligation of funds, which is around 124,000, will happen in May 5th at that town meeting. The auction is just about over, right, Sue? About another week or so, and we think that's going to bring in about 60,000. And like I said, even though we've taken this money out, it's not spent on the steep grant and on the ADA trail. Once it's spent, we'll get a portion or all of that money back, depending on which one it is. But we can't tell you that money's in here if we've already earmarked it. it's, because it's not there. So, it will go back. But so
I just want us to all be able to wrap our heads around this
So that's why I've got so much information on this. The only thing I didn't have on there was the auction and the undesignated fund because they haven't finished it. And like I said though, but if you want to ask Melissa why it went from 5 and change to 4, she was trying to explain it to me and I'll be honest with you. I wasn't grasping it.
I
All right.
I think it's pretty clear in the notes.
Is it?
Yeah, so you have a steep grant, which you encumbered,
Mhm.
and once it's actually spent, which it has not been spent yet, not the entire amount will come back, but it's probably an 80% grant, right? So 340 comes back. And then again, you have 58,000 that's encumbered. Once that comes back, then you'll get the full 58,000.
I'm not confused about that part at all.
No, I'm not talking about the undesignated fund balance. I'm talking about why the give back is different. If you don't want to know.
I do want to know. That's my question is why is the give back different than what was just?
Right, and I need to talk to someone that's smarter than I am to answer that
Then
question.
bring her on.
You can ask her, she's online.
Hi.
Hi.
Hi. So, according to the financial statement that the auditors did for the gap, our actual net fund balance is 507,436. Within that number, the amount that they're saying is non-spendable, committed, and assigned has to be subtracted from that. But then you have to add back last year's non-suspended, committed, and assigned. And that totals the 423,613. So the 507,436 minus last year's non-suspended, committed, and assigned was 85,000. So you have to add that back because it changes, it fluctuates every single year. So they're saying out of the 507, you add back in the non-suspended, committed, and assigned. But then you have to take out what is non-suspended, committed, and assigned, which comes to like 169,000. And that nets to the 423,613, which is what we can use to undesignated funds out of the 507.
So those numbers that you're are subtracting from the 507,436 aren't necessarily on this undesignated fund breakdown?
Correct. We have to take it out of the 507 because we cannot, those funds are committed. We cannot apply those to undesignated funds.
What are they committed to? Do you know? Like,
Yeah, so there's 9,228, which is prepaid vendor bills that we've paid that's not accounted for in the P&L. So they take it and they call it non-suspendable funds that we cannot apply to undesignated funds. We have committed funds, which are the restricted funds for the inland and wetlands and the zoning. And then it also includes the BOE encumbrance of 39,680. And then you have the 96,668 that was put aside for the fiscal year, I believe, 25.
okay, yeah, I remember. Yep. Okay.
So those combined equal about $169,000. And then you have to add in last fiscal year's non-suspended, committed, and assigned, because those are no longer, they've been paid, they're paid, they're included in the P&L. So you have to add those back. So the net is 423,613.
Yeah. This is going to change as a result of the appropriation that we just did tonight for the ambulance.
Yes.
No, yes, I'm just saying, just to get right down to it.
Melissa, is it possible to get a walk from the 507, 436 to the 423, 613 in detail?
Yes.
Thank you.
Do you want me to send it to you? We can send it by email?
Perfect.
Yeah, yep.
I mean, I basically get it, but not seeing it, you know, in paper, I think would help us.
Yeah, I already have it calculated and yep, I can send it.
Okay. So the give back is in this number that we have up in the grid lines. So our current level is 4,373,555.3 roughly. Take the 3 off for accounting, so we're at 18.81%. And
Mike, can I
what's
ask,
that?
can I
And
ask,
then, yeah, and then you're minus in 76 grand.
ask a quick question
Yeah.
before we get too much further? I believe you and Dan were there when he originally set all these percentages up, I think. What'd you figure for percentage for your center between the 8 and the 17? And the reason I'm asking is as our budget's going up or our operating costs are going up, we're supposed to be doubling 2 months worth of stuff. That's gonna change that number before we decide what we're gonna do with this. Are we moving our parameters so we can cover that amount?
I mean,
Sorry to
they,
confuse.
yeah, no, and I think at some point during this process, we're going to be, and I've said this from the beginning, and what Bob, I'm sorry to be going all over the place, but I thought that we were going to have to look at this undesignated fund surplus above our percentage a lot more to keep this budget manageable. If we do it, what we need to do, and the Board of Ed is able to do what they need to do, and we decide that that's what we want the town to do, and it passes with this extra money, it seems like we're not going to be relying on this as much
As we need.
as I thought we were going to, but I think we're still going to have to some degree. That being said, we are then to Gary's point previously, we're going to have a sit down again and decide what we want to do with this policy. And is this 8.5 to 17% appropriate? At the time, and Dan can certainly jump in when, from his recollection, but the prior auditor said, 21%, it would be great, but no one's really doing that. And we as a board thought we don't want to carry the town's people's money any more than we need to. And maybe with these new recommendations, because this is the first time we've ever heard
Yeah.
16.5%.
It's always been the 20s.
It's always been like a high limit of 20, so we didn't want to go that high because we thought it was too rich.
So
And now now it seems like the high end, would be more like, 24 versus 21, which seems crazy to me.
So
And we also have a whole year to decide what to do with that.
We do.
yes.
So it's not okay, so we can get the discussion done and do that before we,
Certainly.
okay.
I mean, if we want to, at that point of time, still want to say we want to maintain the 17%, we can pay down debt or do whatever we want to do.
So that percentage is a floating number. Really, it's from what I remember and everything, it's 8.5 to 17%. It's a floating number based off that year's percentage of the budget. So you're always going to have a floating number depending on which way the budget's going to go. So for us, it's more of a dollar amount Are we comfortable with the amount, barring the percentages? Are we comfortable with the dollar amount that's sitting in the undesignated fund more than, are we comfortable with the percentage of what is in the undesignated fund?
So I totally see it the other way. Yeah, I see the other.
I don't see it the other way
Dan,
around.
this is why, just because like, if it's a percentage, then as inflation goes up, as revenue goes up, then the amount that
The
stays
amount's
in
gonna
there
keep on going up with
going
it.
up, right? So
Yeah,
it
that's
would,
what-
should track, if we get the percentage right, then it should track. We shouldn't have to keep revisiting it, right? It should track against what we would need if there was
Which-
a disaster or something.
Which if I remember going back to the video, we all agreed that the percentage were fine as is.
Yeah.
So I don't understand why we're having this discussion now.
No, I'm just
I
asking.
kind of like
Good question.
Winona mentioned before, and I agree with her, and I think Lou's lit up for the same thing. I think it should be a range, but it should track with revenue as opposed to a percentage, a straight percentage. But I think this is all healthy discussion for when we do the policy review. It's nothing we're going to solve tonight.
Which we already did it.
The only thing I would say, the one thing, and I asked them about it directly. If 16% is the number that our bond holders look at, then 17% doesn't give us a whole heck of a lot of room from there before there's an implication to the bond issue. So that's exactly why I asked him that question, because when he said that that's what they were looking for as a base, we're right at that base, basically.
Okay, just to be clear. No. I put out our policy. So our policy says 8.5 to 17% of operating expenses. And what he quoted is 2 months of revenues, which is not apples to apples.
So it's dollar amounts. Should be dollar amounts.
No, we saw expenses to revenues are two different
Those are two
categories.
different things.
Yeah.
What? No, so I did. This is what I asked. So this is what, so we are talking, so this is the Government Finance Officer Association recommends 2 months of annual revenues.
See, that's a lot higher.
What?
That would be a lot higher.
Which is 16.67% kept in surplus. And this is what I was looking for, the link that I sent out. And what is this? Our policy, sorry, lost what word I was looking for, is based on annual operating expenditures.
What do you think the material difference is between the two? Like if we just did the math, should be pretty close, right?
Yeah, I'm thinking that it's gonna, I'm feeling like it's not apples to apples.
You don't think, but I mean, like if you just did the math, 17% of revenue versus 70% of operating expenses, I'm just wondering what we think the gap is.
Are we including everything in our operating expenses? Are we including capital and everything in there?
I would think so.
I mean, she's,
I get,
To-
no, I'm
to
getting what
Winona-
she's saying. I'm just
to
asking like.
to
what-
Winona's point, if my revenue are $10 is $10, my operating expenses is $6. My capital is 2, my debt is 2. 2 months of revenue is more than two months of expenses.
I know. I
I
get
think
it.
that's
I'm
what
just
we're
trying to, I'm
talking
trying to
about.
understand what
But
the
if we-
material difference is.
In a perfect world, it matches. In a
Well,
not perfect world, we're in trouble.
Yeah, but is it
No,
like
no.
$50? Is it like $50,000?
Hold on,
I mean, like, what is
wait a minute.
it?
Well, let's let
Hold
the
on a
math.
second.
I don't want to
The-
debate and, no, I just don't want to debate in theoretical. Like, I want to know what the actual number is to understand whether it's worth
Okay.
arguing about.
Okay. Oh, but maybe I'm missing something, which wouldn't be the first time today. But in the 32nd draft that the 5th draft that Bob gave us, we have revenues of $24 $71,147.
Okay. Can I just round it
Our
to 20?
budget
21 million.
expenses are $24,586,624.
Yeah, I remember you saying that.
How,
While there is a difference, it's not enough money to make a difference.
So,
So whether we're talking revenues or expenses, the percentage will be within a point.
but if,
I mean,
but,
of course,
but Lou, here's the thing. If you're basing it off of that policy, 2 months of expenditures, I know Mike and I were just talking about this. We asked for from the town what the 2 highest months of expenditures were,
okay,
which we didn't get.
but I don't understand why we would need that.
You based on the worst case.
But it's only that 1 month. This
It's
isn't,
2 months.
well, even 2 months. This is an annualized, an ongoing and monthly look. And so if it dips a little bit between month to month, I mean, I can't imagine our expenses are going to vary substantially from 1 month to another. That would impact our ability to,
Our revenues might.
but they might, but on average, it's not going to make a difference. It can't, because if we base it on percentages, it should tie right in with both numbers.
So we fine with the 17 that we talked about 2
No,
months ago?
This is only my opinion. When I heard 16%, that just reinforced what I thought we should be looking at, a range now of 10 to 20, because then the 16% puts us right there in the middle
I'm
of that.
sure if I go,
That's just my opinion.
I'm sure if I go back to all the budgets that we've had, we get a different number every single year. Because the last set of auditors that we had, they were talking, oh, well, you should be in the high 20s and you should have this, and you're kind of more, your high number is more what your middle should be, and
I can only go with what my current
Well-
order tells me. And that's all I can work with.
and next year it could change again. It's a floating number. It's what we think it should be, all right.
Okay, I think this is a healthy discussion and we're gonna have it again. I can guarantee we're gonna have it again. So for purposes of this budget season, we needed to know what that give back was going to be. And we now know what it is. We know what our percentage is, barring anything else coming back from the steep grant or the trails grant, which I don't see happening before June 30th, 2024. In other words, it's going to be a pretty shitty trail. As far as my French, but
I have one more question related to the audit. It's just sort of an overarching. Are we going to return to the normal cadence for next year's budget cycle where we get this a couple months earlier than?
we are.
Good. Okay, that's all I want.
Yeah, this was not.
Yep.
This was not a normal situation. This is not what we want. This is not how we're supposed to happen.
I think they did a good job catching up.
Yeah, I really commend Sue and Melissa and everyone at the Board of Education for getting things in order to, I mean, how great is it that we have, a clean audit? And, given the staffing issues that we had last year. So you are to be commended, Melissa and everyone, Kathy, in the central office. Does anyone have any further on the undesignated fund? We're just, the purpose is we want to know what's in there. What do we have to play with if we need it? We're still focused on expense budgets for the Board of Selectmen, which is now set for now for public hearing. We got to hear back from the Board of Education next Wednesday. And that's where we are.
So next Wednesday, we get the Board of Ed budget and like, that's it. Cards are on the table. And we have to make final decisions next Wednesday because that's when everything has to be decided to go to the hearing, correct?
Correct. We have, if you look on your first page of your packet,
Schedules.
we are at April 2nd. And we're kind of maybe behind just a little bit on a week, but we would want to vote on the Board of Education presented budget to move that forward. Because we're already set with Board of Selectmen, so we're finishing all reviews and voting to go to public hearing, hopefully next Wednesday.
When are we getting the Board of Ed's budget? Are we getting it Monday or Wednesday?
I believe they,
Are we going to receive?
That's not the
That-
question I asked. He's
Yeah.
got to answer my question
Okay,
first.
answer her question. And then I'm going to ask a follow-up question.
Okay.
they are either I think they're meeting next, what? Met tonight. You're meeting again Monday, that's good, that's right. I thought it was tonight. And
At the same
And that you were gonna maybe have another meeting if necessary. Okay. There's your answer. So we will have whatever budget they vote to put forward to us by Monday night, probably receive materials, hopefully Tuesday.
They're gonna bring us a 4%, because that's what they asked us. They asked for a hard number. I expect, or we should expect to see the 4%. I just want to be clear.
As a point of order on that, we voted on it 4-2 for them to cut. If they don't have 4%, I'm with Gary. There's not much to meet on.
And it just elephant in the room, just because the Board of Selectmen are at 3.77 doesn't provide relief. I'd like to see 4% before we even contemplate anything less than 4%.
I agree with Gary.
They have our guidance, so we will see next Wednesday what we have. Anything further on the undesignated fund?
So are you asking about the undesignated fund as a tool to use? Or are we just talking about it to argue over revenue or expense?
I am not recommending anything with the undesignated fund at this time. I am simply keeping the fund and where it is at as in the back of our minds as we go through this budget process. Because it is a tool. It's always been a tool to be used if need be. But at this point, we're focusing on what we want, what we have for revenue coming in excess of last year. And what do we want for expenditures from both sides compared to last year. And right now it's 4% from each. And to Bob's point, if they do that with the additional revenue, we might be close enough to never even worry about
And this
anything else.
G5 has the updated revenue forecast in it.
Say that again?
The V5 of the
Mhm.
budget that Bob sent, did you send that in an email or is it, we just have the draft? Both, okay. It has the revised revenue, which includes the new way of calculating the auto tax
It's got 158 for the auto tax and the other 4,000 for the rec that we put in to bring it to like 911,000, I believe.
They're the good ones.
Just to go back to that chart that he showed us for the undesignated fund
From the,
from the audit.
no, the bar chart that showed.
Yeah. Yeah, it just keeps coming back to me as, it just seems like we have a very tight undesignated fund,
Well, it's better than it was probably about 10 years ago.
but it's still,
Well,
it's not, I mean, you look at the fund and it seems like the town has quote unquote extra money, but I don't think we have too much freedom with it.
well, this is the chart that you're talking about, right?
And the one before, I believe. If you look at what's committed and otherwise. And I'm just looking at it from a point of view of if there is an emergency and the town needs to dip into it.
Well, if you were to take out Salem, which is a very unusual, I mean, I can't imagine
Right, that's too
what's going on
much.
there. But we're right in the middle, the way they've computed it,
Mhm.
which is a little bit different than ours. And we're right in the middle between the other communities. So,
I think we're in the high level.
Yeah.
I mean,
I just think we need to be careful. Just,
understand. I mean, I think that might be going to Lou's point of 16% being a median versus a high end. But right now we have a policy that says 17% is our highest end. So, and we've all, I don't think anybody on this board would like to see us down anywhere near the floor of our policy. But at the same time, we still have to remember this is town taxpayer money that we're holding on to. So and we want it to be there to be attractive. Should we have to go to the bond market? If we need the money for an emergency. And and it's there, and it says it right in our policy, it's there to level out highs and lows and bumps in budget years. And we've used it in the past and very fiscally soundly. And I'm just saying, we know we have, before we even get any money back for money that we've already de-obligated out of there. So, because you look at, go look at that, look at the undesignated fund thing again. The 426,153 is out of the undesignated fund as of 10/6/2023. The 58,000 is out of there as of 11/25/2024, and we still have 18.81%.
Yeah, but isn't included in there the 298 of the schools non-lapsing from back in June?
No,
Okay, it's out.
that was never part of
That's
this.
not in that.
No,
It
this
was in the audit.
that's in the audit. That has nothing to do with this, Barry. The only thing that would have to come out is if 76,000 comes out that the town votes to give to the ambulance. But my point is, this is, not only is it healthy as it is right now, you add those numbers back and we're in good shape to say we have options.
I agree.
And
but
we have options to pay down debt later on if we think that we are, if this money does come back and we are way too high and we want to pay down debt, That's what we're supposed to do.
I agree, but on the other side, balancing a budget that becomes the starting point for next year's budget, I don't agree with.
And that's why, Gary, I dropped it from the first conversation, that we need to come in with fiscally proper budgets, and then we have a tool.
Yep.
It's not to say, hey, we have a slush fund, let's jack up the budgets, because we're not doing that.
Gary, that was my biggest concern.
Yeah,
Thank you.
I think everybody, I won't speak for everybody, but I think everybody understands that the two budgets and the final mill rate are two separate entities in my mind.
And that's a good way to look at it.
You know, get your house in order, make sure both houses are in order and everything. And then when we have to adjust the mill rate accordingly, we have the funds to do that.
We have, and I think we've done this, even those years that during COVID, when we did have to use it, the undesignated fund is a source of last resort. It's not a source of first resort. And I think we can all agree on that.
Yeah, because when other towns were having to really jack up the mill rates and everything because they didn't have the undesignated funds, we were keeping everything kind of even keel and we ended up paying it back.
Yeah.
Yep.
Okay. On to Amy's minutes. I read them and they were, yeah. I move to accept the meeting minutes as presented.
Second.
Any further discussion? All those in favor say aye.
Aye.
Any opposed? Any abstentions? And just so we have clear on the record,
It's 326.
320, the meetings of 326.
Yep.
And they were fantastically done, once again, by our secretary. On to public comment.
Nobody here? Make a motion to adjourn.
Second. All those in favor?
Aye.